and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, you know that this is your show where you get all your stock-related queries answered by our experts. So do get ready. But before coming to that, let's have a look at what the markets are up to. So very good morning, Cheryl. The second day of the week seems like a good start for the Indian markets. We did lose some bit of a steam, but at least still holding in the green right now.
Absolutely. Very good morning to you, Shrishti. And muted moves coming in for the benchmark indices as we speak, but we are in the positive territory. We've given up most of those morning gains, but nevertheless holding on to gains about 0.3% as we speak. You have Nifty Bank that's marginally underperforming the benchmark indices as we speak, trading flat with a positive bias. Key to note is Axis Bank. That one is seeing a 2.5% knock post its quarterly earnings as a reaction to that. But on the flip side, you have Tata Motors, that is the top gainer on the Nifty as we speak. You have Adani Enterprises, Asian Paints, HCL Tech, as well as HDFC Bank holding on to good gains as of now. But like I mentioned, on the losing end, it is Axis Bank, also Dr. Reddy's, that is under pressure in today's trading session. Let's take a note of what are the sectoral indices doing, and BSE Realty Index, NSE Realty Index is down once again. This would be a fourth consecutive day of fall coming in for the Realty Index. We have Pharma Index that's seeing a bit of pressure, Metal Index as well in the negative territory. Actually, key to also note what the broader markets are doing at this juncture, as in the mid-cap index as well as small-cap index, because both of them right now are nudging towards that negative territory, flat with a negative bias. You have IT Index, that is the top sectoral gainer as we speak. You have Auto Index as well, that's holding on to gains of about 0.5% along with FMCG Index. So these are the sectors that are performing in trade today. But today, definitely all eyes will be on the banking sector, and the only reason why we're discussing banking space in the BNSN lens segment today, Shrishti, is the fact that you have almost all the major banks come out with their earnings, at least for the private sector banks, isn't it?
Well, yes, absolutely, Cheryl, and that's very important to highlight for all our viewers. What are the trends that we are picking up? We'll discuss in detail with our expert which are their top recommendations in the banking space. But before coming to that, let's listen into what Nikunj Dalmia, managing editor of ET Now and ET Now Swadesh, had to say on the banking space.
There are two things which are happening in the market. One is that where banks, in a sense, are giving you growth in terms of credit and also in terms of maintaining their margins, and where the earnings surprise is the highest. So the top draw there, I think, is Axis Bank. Cheap, has not participated, was the late to jump on the banking rally, so to speak. Numbers have been strong. Now markets are convinced that the worst of the book is behind them. Axis for the longest time has struggled for inconsistent delivery and for a poor book quality. I think that wave is behind us. And Axis, in a sense, is at a new cusp of a new avatar because of the acquisition of the credit card business, also what they will do in order to move out in terms of forging the entire insurance business. So Axis for next couple of years now becomes a completely different franchise, so to speak. Second, I would say HDFC Bank, even though it's been consistent in terms, it's not beaten a lot of estimates, but the CASA, I think, is strong and the deposit growth is strong. So there are two factors which now would be at play. See, SBI is rediscovered. SBI, everybody knows, is headed in the right direction. ICICI Bank, the re-rating is done. Within Kotak and HDFC Bank, I would say it's a difficult one, but I would say HDFC Bank because again it has underperformed and CASA is strong. But Axis is the one where I would say that the real bank for the buck or the re-rating is still left, given that directionally where the franchise actually is headed.
The take coming in from ET Now Swadesh's managing editor Nikunj Dalmia, who believes that you are yet to see the re-rating in Axis Bank. And not to forget, Axis Bank today is under pressure on back of its earnings. But what exactly is happening in the banking space? Do you think that this year will be the year for the banking space, making a huge comeback once again? Will HDFC Bank be an outperformer? Let's ask all of that question to our experts today. We have Hemant Kapadia on the technical side, as well as Mr. G. Chokalingam, who's joining us on the fundamentals. Very good morning to you, Hemant, as well as Mr. Chokalingam. Thank you so much for joining us on ET Now. And Mr. Chokalingam, let me first come to you. One is, how are you viewing the earnings that have come out from the banking space, be it the private sector banks? We're yet to see the major PSU banks come out with their numbers, that is the likes of SBI. But otherwise, how are you witnessing or how are you viewing the entire banking space, and where will you place your bets on, the private sector banks or the PSBs?
Yeah, good morning. This is a very interesting question. If you look at the history, I think the banking sector now positioned, in a very extremely peculiar way in terms of positive developments. There are four major structural changes. To cut short, to be very brief, one, all of us know the NPA cycle has already bottomed out 2 quarters ago, and it has been continuously going down, not only for private banks, even for public sector banks. And second, the credit growth. Post pandemic, it came down as low as 5%. Now it has picked up even above 15%, which is again, 10-year record high. This is a second structural change. Third, historically the credit deposit ratio used to be around 70 to 80% range for most banks. But what is interesting to note is that if you see this December results, for many banks, the credit growth is substantially more than the deposit growth. So there is a tremendous push to credit deposit ratio, which means there is a robust demand for credit, and it is likely to continue. And fourth, the structural changes, the banks eating into NBFCs in many consumer segments. For example, in gold loan segment, they have made a major inroad into the NBFCs domain and captured the big markets. Now the point is that all these post-structural changes have helped in Q3. So that is why most banks have posted a profit growth of anywhere 20 to even 60%, the credit growth of 15 to 30%. Now, interesting to note is that these structural changes are continuing now, even in the current quarter. As you asked in the beginning, they are likely to continue the whole of 23. So which means I think this year is going to be the year of banks, and already it is visible in Nifty Sensex earnings. Their earning growth, basically the positive growth was contributed by the banking sector, because most other sectors together, the profit growth is year-on-year basis stagnating. So this is likely to continue. So one should have a significant exposure, particularly to large private banks and large public sector banks.
Okay, so this year could be once again the year for the banking sector, and the focus will be on the large public and private sector banks. But Hemain, coming to you clearly on the technicals, which one would be your pick or your favorite pick on the banking space? Because we have seen a bit of a muted reaction coming in even after a good set of numbers, be it from the likes of Axis Bank, ICICI Bank. All these large cap names didn't perform that great after their earnings, but the HDFC twins seem to be outperforming. Which one, what is your take on the banking space? And in that as well, which one would you like to have a trade on?
A very good morning to you, Sush. Thank you for having me on the show. See, traditionally, if you see last 15 or 20 years, it's been HDFC Bank and Kotak Bank which sort of led the entire bank nifty or the banking pack. PSUs had been, almost, not any, didn't contribute anything of significance to the bank nifty. But now they're back with the bang. So coming back to your question, I think HDFC Bank would be my pick in the private sector banks. It hasn't done much. It is playing catch up now. Looks good. It's broken out of what is a 9-10 week consolidation phase. Has not posted a fresh all-time high. So what I mean to say is it has headroom. So in the private sector bank space, I'd say HDFC Bank. In the public sector bank space, I'd say Can Bank. Both look good, and I believe further upside seems to be a cinch. Shushti.
All right, so that's the take coming in from him in HDFC Bank in the private sector space, Canara Bank in the PSU banking space is what Hemain likes. And on that note, we'll actually slip into a break on this edition of Buy Now Sell Now, because when we come back, viewers, we will be back with your queries. So don't go anywhere. Welcome back, and you're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can connect to us. We are live on YouTube, Facebook, as well as on Twitter. You can write to us on your stock-related queries. Do mention the name of the stock. If you've purchased it, then at what price and what's the quantity and the time horizon that you're looking to hold a counter. And if you've not purchased it, then do let us know what's your time horizon you wish to hold a particular counter. Also, you can write to us on our WhatsApp number. Today, our WhatsApp number is live and we are accessible on WhatsApp, so do write on to us on our WhatsApp number that will be flashing on the top of your screen very shortly. But before that, before we get your queries answered, Mr. Chokalingam, coming to you. And yes, we are almost towards the end of the month of January, a volatile month, a volatile start to the year 2023. For the rest of the year, what should retail investors do? What sort of a strategy should they adopt to make sure that their wealth is protected?
Yeah, as I've been always saying, don't put borrowed money. And two, mitigate the risk of equity by asset allocation. So don't put more than 50-60% of your financial wealth, surplus wealth into equity. The rest you put it in fixed income securities. Third, most important, ensure that minimum 50% of your equity asset is in top 250 stocks, because there are 3-4 major risk factors: any possible war in Taiwan or any battle on the border. And second, bubble in the oil price is possible in the middle of 23, because world economy is expected to improve in the middle of 2023. And third, the risk is coming from our export front, which is declining. And these are the couple of major risk factors. And lastly, 7 state elections are coming, and after that you have a Lok Sabha election. So by any chance, if there is any uncertainty regarding the majority of any party, that also could create some disturbance to the market. So therefore, 2023, particularly from middle of 23, there are a lot of major risk factors. And already we are seeing the B group shares in BSE, which represents small cap. The combined market cap is down almost 30% year-on-year basis. So therefore, top 250 stocks you have to protect. I'm not saying that they are safe, but easy to get out. And secondly, when our market falls, the DI is concentrate, domestic institution mutual fund. Firstly, they concentrate in these top 250 stocks. So that protects really in relative terms your wealth. So these are the 4 strategies you follow. But long-term story remains fantastic. There is no doubt. But short-term, there are some risk factors. So therefore, please follow these 4 strategies.
Okay, so those are the strategies for all our retail investors. The long-term growth strategy is intact, but for the short term, do keep a note of all the risk factors that are lying out there, and do make changes in your investment strategy according to that. But let's move on and kickstart taking all your stock-related queries into the show. And the first question that we have is coming from Srinath and Heyman. Let me have the answer from you on this. He's looking to make a fresh investment in Tata Elxsi and wants to know a good price to enter, because from over 10,000 of rupees, the stock is now down to 7,000 odd levels. Do you feel that the correction is over now, and is this a good time to enter in this particular counter?
Tata Elxsi still looks quite costly to me. Of course, it has posted phenomenal growth in the recent past, but now there is a structural change in terms of dollar term. The growth is now poor single digit. So I'm not sure whether Tata Elxsi would be able to repeat what it has done in the last 6 to 8 quarters. So therefore, I would suggest that wait for the results. If the growth is substantial, then only you enter. Otherwise, you can always look at stocks like Infosys or TCS.
A couple of queries I've got actually in the banking space, and we did speak in depth about the banking sector in our BNSN lens. But Heyman, let me club 2 queries and let me try and address them for you. One is from Syed Imad, and he's bought ICICI Bank at around 870 rupees per share. He's saying the results spike, he bought this for the results spike, but that's not the way how it panned out for ICICI Bank. So now he wants to know, should he hold or exit? And can you see the level of 900 by today or tomorrow for ICICI Bank is what Syed is asking. I like that expression on your face, Amen. But let me take the next query also. And this one is on Axis Bank. One is Arun is asking why Axis Bank is going down. He has purchased Axis Bank Feb call options at 940 at 20. So he wants to know what should he do. So one is on Axis, one is on.
Well, actually, Cheryl, firstly, a stop loss at 855 for ICICI Bank. Well, that expression was slightly like Mission Impossible, frankly speaking. 2 days, 900. Okay, we formed a small rounding bottom. The technical setup on the short-term charts has improved. Once again, I'd reiterate, stop loss at 855. We need a close above 880 to go to his level. Is it going to happen in the next couple of days? I am not sure. But near term, there are some technical positives. The medium term picture seems muddy. Excuse me. It's walked into an intermediate correction. Coming back to Axis Bank, okay, why it's going down? Well, it moved up from 620 to 970. It made a new all-time high. HDFC Bank didn't make, Kotak Bank didn't make, IndusInd Bank didn't make. What I mean to bring the point to the fore is this is one of the few stocks along with ICICI and SBI which made new all-time highs. So laws of gravity are catching up. We walked into intermediate correction. The mechanical indicators are now giving a crossover sell. I believe it's going to go down further. This is just the beginning. Seemed like a distribution, a possible head and shoulder pattern happening. Stay away. I see further pressure coming in Axis Bank.
Okay, so that's the view coming in on banking sector, banking stocks. But let's move on to the next one. Mr. Chokalingam, Vijay wants to make a fresh investment in the auto space, and he has two options in mind. One is Ashok Leyland, and the other one he has Eicher Motors. Any of these counters you like for a fresh investment at this point in time?
I would suggest, instead of looking at a two-wheeler space where a lot of uncertainties are there, you can look at Maruti Suzuki. I am pretty confident that with the new models, Maruti Suzuki would do much better. That would be my most preferred choice within the auto sector.
All right. This one's come from Sri Kutan and he's holding Persistent at 3,700 rupees per share. He has a long-term view on this one, wants to hold it for the next 2 to 3 years. But however, Mr. Chokalingam, what he's asking is, should he book some profits and buy back again at a lower level or average? What will be the best strategy when it comes to Persistent Systems? Because he's already holding at 3,700.
Hold on to it. It's slightly costly, but then that is justified because of the growth coming in. It's one of the few IT stocks to post a very impressive growth. So another 5-10%, if it jumps, then you can book profits and then re-enter on any possible major correction.
Okay, once again, Mr. Chokalingam, coming to you. Satyan is holding 100 shares of LIC Housing Finance at a price of 393. He wants to know, is that a hold or sell at these levels? His investment horizon is for the next 2 years.
If he's losing, he can hold on. If he's only marginal loss or gain, he can book. I am not very comfortable with this housing finance company. The competition is heated up and it's not doing that great. So therefore, if he's not making much losses, he can sell it and exit the stock.
I have two queries, both of them for Karur Vysya Bank. So let me take them. Though they are short-term view and they've asked you, Mr. Chokalingam, I'll take it to Hemin instead. Seema wants to know if Karur Vysya Bank is a very good buy at current price for a period of 6 months, Hemin. While Mr. Raja also has Karur Vysya Bank, which he's already purchased at a price of 93 rupees per share. So wants to know whether he should hold or book profit for the short term.
Can hold at least another 10-15% upside is very much possible. As I mentioned, the rally is likely to continue. So on any further 10-15% rise, they can sell and then move to stock like HDFC Bank.
Hemin, what's your take on Karur Vysya? Do you think it's a good buy for a 6-month period?
I'd wait a bit, Cheryl. I think we walked into a corrective phase. I would be more comfortable buying at the levels of 94 and 90. So yeah, we need to close below 100 before that, but I distinctly feel we need a time price correction to digest the rise from 40 to 2115. I'd wait a bit for lower levels.
Okay, moving on to the next one, Mr. Chokalingam, coming to you. Sheshma is holding 27 shares of SJS Enterprise from a price of 547, losing about 100 rupees a share right now. What's your view on this particular counter and any time horizon where she can expect recovery for this particular counter?
Unfortunately, auto component space has seen a serious valuation contraction. Unable to understand, but the SJS Enterprise, we looked at it. It looks very attractive. I think there is no need to panic and book losses. Definitely, the investor can hold on till full recovery happens, or even 5-10% profit comes in. Till that time, one can hold on to SGS enterprises.
That's a hold coming in on SGS. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. We have Mr. Chokalingam as well as Hemeen Kaparia with us onto the show today. And for the next question, Mr. Chokalingam, coming to you, Venkatramani is holding shares of Adani Ports, around 400 shares at a price of 856, currently at a loss, but he can actually average out this counter, so he wants to know which could be the right price where he can average out his investment horizon is for the next 1 to 2 years.
He can hold on Adani Port, no need to book losses because standalone the company is doing extremely well among all Adani groups. But as I mentioned earlier also, suddenly India's exports have decelerated substantially in double digit. Even imports surprisingly fallen in December month, so which are negative for port businesses. So therefore, he can wait for some more time to get uptick in import-export or better results from Adani Port before buying more quantity. Otherwise, till that time, he can hold on to Adani Port.
This one is coming from Ashili Anthony on Uno Minda. The buy price is 525 rupees per share. He has a 1 to 2 year horizon, but wants to know whether he should stay put with the stock, hold, or average it. And if average, he wants to know what sort of a level should he look at.
Pardon me, what is the stock name?
This one is for Hemeen, Mr. Chokalingam. Uno Minda.
Cheryl, I'd wait a bit. We made a lower top, and I believe we are on the cusp of breaking 500, which is an important support level, Cheryl. So I'd say wait, hold on. You can wait 2-3 levels where I think he can look to buy. The first level is 460, 437, and the final one is 385. I'd wait a bit. I think the chances of it making a new high in this calendar year on technical parameters seem rather remote. Cheryl.
Okay, moving on to the next one, and Hemeen, once again coming to you, Padma Siv Rao wants to know your outlook on RBL Bank. He wants to know, is this a right time to enter in this particular counter after we are seeing a bit of a fall coming in for this one? So what's your view on this one?
Yeah, the past history has been woeful, abysmal, whatever you term it, Shushti. It's been a perennial underperformer. Okay, we've sort of given a bounce back, but somehow I'm not sure how much confidence I have on the stock based on the past performance. Having said that, we walked in a corrective phase. We have support coming in just near current level at 157. 157, 137, I'd wait a bit, not fair to compare, but I'd rather buy HDFC Bank.
The next query, I have two of them who've asked on the same stock, and this one is for you, Mr. Chokalingam. One is Jayashree wants your outlook for GNFC in this year alone, and on the other hand, I have Santi who has asked about GNFC, wants to know whether it makes sense to take a position for the long term in GNFC. Also wants to understand what sort of a budget impact, what sort of an impact the budget could have on the stock price action.
Yeah, so the last question, budget impact, it's very difficult, unless you are part of the finance ministry, know particular implication for a company product. One need not worry too much. After 1 week, budget is presented, stock market ignores completely budget. So that's my permanent view. Secondly, GNFC, in fact, we also invested personally. Unfortunately, the stock has come down a lot because some of the chemical product prices have come down. But let me tell you, this is one of the gems in the chemical space. Zero debt, few thousands of crores of cash the company holds. It's trading at a poor single-digit PE, and it is monopoly in couple of chemical products. And products are used across almost every sector of the economy. So I'm pretty confident that the stock would bounce back. They are also expanding capacities across various verticals. So one should definitely hold on to the stock for 1 to 2 years, and definitely I believe the stock will create wealth for the investors.
Okay, moving on, and Mr. Chokalingam, once again coming to you. Vivek has been following you since 2018, where you must have recommended Cochin Shipyard. And Vivek entered this counter at a price of 416. Currently, he's making profits. He wants to know what is the outlook. Is this a good time to book profits in this one, add more, or sell at these levels?
Yeah, you could have booked profit. In fact, I remember last month, 1 month back, it went up substantially. If there is small recovery further, one can book profit. One should keep in mind that the PSU stocks, they follow 3 to 5 year cycle. They get hammered, whatever is the fundamental, they get hammered by the market for 2, 3, 4 years. And then once in 3, 4 years, they come back and reward you, in unexpected magnitude. So keep this back of mind. And then therefore, whenever it substantially rises from the bottom 50% under 200%, don't hesitate to book profit and exit the counter because the cycle goes on. I've been seeing this cycle for more than 25 years in the PSU stocks.
Right, this one is for you, Heyman. This one is coming from Manish Raju. He wants to know whether he can enter BEL and HAL for a period of 2 to 4 weeks for a small upside with budget and Q3 events, or is it better to avoid these kind of trades given the current market scenario? Very pertinent question that I believe Manish Raju has asked, and I believe whatever answer you will give, it will be for everybody's benefit.
Oh, absolutely, Cheryl. If you're talking about BEL for a few such a short period for the budget, I don't think so. We walked into a corrective phase. No, I don't think it's a buy. And talking about HAL, it's a slightly different matter. The short-term charts are positive. It's set for a bounce. So if you're looking to play for 100, 150 point bounce, only and only then do you buy HAL with a stop loss of 24. But BEL is not a buy in the short or to medium term. Sure.
On and Himin, once again coming to you. Rajiv from Agra is holding over 600 shares of NTPC at a price of 153. Though he is a long-term investor, he wants to know your outlook on this one because since December itself, we are seeing the stock to be quite range-bound. So going ahead, what's your outlook on this?
Well, frankly speaking, Sushri, 13 weeks and counting, it's gone nowhere. Like you said, there isn't a trending bias. We become range bound. And frankly speaking, if it becomes range bound for too long, it will fall under its own weight. So the long-term charts seem pretty solid, nothing to worry. But after 13 weeks, and if we don't close up a 177, chances are that we break 160 and come to 155 first. So we're in a consolidation phase, and we PSU, it moves from 80 to 180 plus. That's huge time for a breather.
Okay, this one is coming from Abhishek Mehta, and this one is for you, Mr. Chokalingam. He wants a view on Tata Steel long products. He's saying this the stock is stuck and at a price of around 865 rupees per share. He's a long-term investor. Wants to know what should he do with this one.
If he's losing heavily, he can hold on. If he's only marginal loss, he can come out because I believe that for another 2 quarters minimum, the outlook for entire steel industry is very, very pessimistic. We've already seen the kind of results some large steel company has posted. So this kind of trend is going to continue not only for December quarter, even Jan-March quarter. So therefore, if it's a marginal loss, one can sell and exit. If it is a steep loss, then convert this as a 2 to 3 year hold.
Okay, moving on, and Himin, coming to you. Sandeep is holding 2 shares. First query is on India Cements. He's holding these shares from a price of 222, and the other one he has is PNB Housing Finance from a price of 544 rupees. What's your outlook on both of these counters?
Low top, low for India Cement. Support at 195, 180, resistance 211, 235. Getting slightly oversold on the short term doesn't mean well. I don't think anything is going to happen till it takes support and at 195 and bounces back. So medium term picture is spoiled, but yes, bounce could be around the corner, but only from 195. PNB Housing Finance, we walked into a small correction. The bigger picture seems positive. The long term charts indicate a rounding bottom, which is a bullish formation. Short term, yes, some negatives, but yeah, not fair to compare. But structurally, on technical parameters, PNB Housing Finance looks relatively much better than India Cement.
Right. This one is coming in from Madhuri Balaji, and what she's saying is that of late the stocks that she's entered, they have right after she's bought them, they've entered into correction phase. So she wants you to recommend two fundamentally strong counters other than IT sector that have bottomed out with very less risk of further correction. Will you be able to answer this one by any chance, Hemant?
Well, I would have I would have gone for IT, but she specifically said that she does not want IT. So that is out of the equation. So I would say we spoke about a Karor Yatra Bank. I think that is something which I like on technical parameters. That looks extremely interesting. Longer term point of view, only on declines. And the other stock is, I would say, something like an uh, Ipca Labs. Nothing much to lose. Looks fine. Oversold. A recovery is just around the corner. So I would say these two stocks, which I think decent and technical parameters would quantify a buy.
Okay, moving on. The next question is from Victor and Mr. Chokalingam coming to you for this one. He's a long-term investor and wants to know: is this worth investing in NIIT for a long-term investment horizon?
One can definitely, as I've been saying, that most IT stocks have been hammered more than what they deserve. So definitely for long term, you can consider NIT.
This one is coming from Vivek, and he wants your view on Aditya Birla Sun Life AMC, Mr. Chokalingam. I'm unsure if you track this one, but he's saying that he is in it since the IPO. The stock has been down since ever. So he wants to know whether he should exit or hold on, or if hold on, then for how long should he be invested in this one?
I would suggest exit because the competition is extremely tight in this sector, and this company is not able to do extremely well. You can sell and buy stocks like HDFC Bank. That would be a safe investment strategy.
Himin, coming to you for next one. Vinod has bought 20 shares of LTTS from a price of 3,340 rupees. Recently, we have seen a good move in all of these IT counters. What's your view on LTTS? He can hold this counter for the next 12 months.
I'd say if she can extend his time period 24 months, I'd be more comfortable. Short-term bounce resistance at 3600, we seem to be going there. The bigger picture still seems wobbly in the sense we will need some time price retracement. So please extend the time frame. Everything else seems fine, but looking at the position of the mechanical indicators and the run-up we've had from 1000 to 6000, the rise has not been digested completely. So it's going to take a lot more time. It goes up in the meantime, but no, a new high currently is not on the anvil, at least in the next, once again, 6-8 months or so.
All right. On that note, actually, we'll slip into a break in this edition of Buy Now, Sell Now. Viewers, don't go anywhere. We'll be back taking your queries, and also experts hang in there. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. And this one is coming from Hemantha Datta. Anant Raj, 110 shares at a price of 118 rupees per share. Mr. Chokalingam, and Deepak Nitrite, 10 shares at a price around 2,000 rupees per share. He's looking to hold these counters for the long term. Can he do that? Also, would it make sense to average Deepak Nitrite right now?
I won't advise, generally in chemical sector to average, wait for another 1 or 2 quarters. If you don't mind, you can sell Deepak Nitrate as well as Anand Raj and shift to stocks like, Oberoi Realty or some banking space. Now, banking space is going to be the most outperforming sector for 23. So that's better to shift to stock like HDFC Bank.
Okay, moving on, Mr. Chokalingam, coming to you once again. Venkat Lata has been holding 200 shares of MCX from a price of 750 rupees. More than a doubler for him right now. So he's looking to sell 100 shares and buy rather Clean Sciences, Avas or RHI Magnesita. What will be your advice? Is this should be this strategy for him?
I would definitely encourage him to book profit entirely in MCX, but all the 3 stocks I would not buy. I looked at the valuation. There is no comfort to me. I would again suggest that use this money to protect your wealth and by investing in some nifty Sensex stock, preferably from the banking sector or IT sector.
Okay, Meena has 500 shares of Yes Bank purchased at the price of 22.8 rupees per share. Mr. Chokalingam should sell or hold on to it or look to switch to another counter because the buy price for Yes Bank is very close to the 52-week high levels.
One can hold on Yes Bank. I looked at it post results. Net NPA has come down a lot because of the restructuring. And also the credit growth has come back to positive at around 10%. So both are definitely positive development. Valuation wise also it is trading at around just 1.4 times, which is quite reasonable. I think this is a price for holding Yes Bank rather than selling it.
Okay, moving on, and it's now time to start the rapid fire session. And Hemant, coming to you first for the first query from Anubhav. He's holding 100 shares of Bharti Airtel at a price of 785. Continue to hold on or exit at these levels? He's a long-term investor.
Hold.
Okay, Mr. Chokalingam, this one is coming from Raghupati Gopal, ITC, 150 shares at a price of 215 rupees per share. This is the only FMCG stock that he has in his portfolio. Should he buy equal quantity after the budget or look at some other FMCG counters?
Should look at other counter like HUL.
Mr. Chokalingam, Kumuran is holding shares of Sequence Scientific from a price of 184 rupees at a huge loss right now. Average, hold or exit at these levels?
Don't average it, hold on for some time.
Okay, Heyman, Venkatesh wants to know if it's good time to accumulate Gland Pharma.
Nope.
Okay, Hemant, coming to you, RK is holding shares of JK Tyres and currently is at a profit of 15%. Advisable to book profits at these levels?
Yes, I'd say book. Yeah, I'd say book profit.
Okay, Dhananjay as well as Shobna, both of them want to know about Bajaj Finance. Makes sense to increase positions right now for a period of 3 years or so. What's your take, Mr. Chokalingam?
I would wait for at least another 10-15% correction before entering Bajaj Finance.
Okay, Mr. Chokalingam, Chandrasekharan is looking to enter two IT names. One is Emphasis or the other one is Coforge. Which one will be your pick for in the next 2 years?
Coforge. Looked at both. That is better than Emphasis.
All right, Swayam wants to know about for medium term for the next 2 years, Shopper Stop or Kalpataru Power, Mr. Chokalingam?
I looked at them, but I would not touch both these two stocks.
Hemant, Ramesh is holding shares of SAIL, 1000 shares from a price of 88 rupees. Hold or book profit at these levels?
Hold with a protect it at 88, put about 94.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Heyman, as well as Mr. Chokalingam for joining us on the show, giving us your take on the banking space. What exactly should viewers do in the banking space, and also resolving viewer queries. And viewers, with that, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned, Markets at Noon coming up next.